Hey folks, doing a special report, another meltdown. um, just a few, I want to let a few join before I say too much. But welcome. We keep meeting on Fridays like this. This happened last Friday. Remember to have your Runa. Also, okay, we got about 65, 70 already in the room. Another special report on a Friday. Hi, I'm Bob Kendall. Kendall Report here. We were just in an impromptu session in our live trading room. There were a number of us over there just chatting, and I was talking about what's going on today, answering some questions, and I got triggered into a absolute mega rant. And I know you folks love my rants, but this one is needs to be shared. I have no idea if I'll be able to do it as well as I did it earlier, but there's some things going on. The title of this video I'm just doing is Fed Loses Control, and I'm going to show you something that I came across just talking to our community on the live trading room, and I still haven't recovered from what I saw. And so some of the things I'm going to say here is going to be pretty, I think, aggressive. I've been around these markets a long time. I've been a Fed watcher for a long time. The title of this is couldn't say it better. I've been talking to you about on this channel for a while that the dog is going to wag the tail again. Well, something even more catastrophic, I think, is happening. I've been saying for a number of days now, going back to a week ago, that I don't believe that any of the stuff that's going on the screen right now, the sell-off, has not one thing to do with new variants. It has everything to do with what's going on in the Fed. And I'm going to go through this. We'll go to charts here in a few minutes. I know everybody's worried about that. We got about an hour to go. Whatever's happening is happening. But this is important, what I want to say, and then I'm going to show you and back this up with some data here. But when we were on the channel just chatting, I started talking about, and I've been saying this on the daily streams I do every day, that these yield curve is just collapsing. And we started to look at some historical stuff. I'm going to do more work on this over the weekend, I can tell you right now. I am so incredibly intrigued by what I ran into. I had to share it with you folks, and I'm going to get to the point. So here's what I've been talking about. The dog is going to wag the tail, right? But the more catastrophic thing that has happened here is this. The Fed denied the inflation scenario, that it was transitory, it was going to go away. And then the other day, they start to get really aggressive as Powell's testifying on Tuesday and Wednesday, I think it was, when he was talking about, they're now looking at, we need to get rid of that word temporary. So I now adopted temporary because of that. They're so far behind the curve. But then he also said that we're going to have to speed up the taper, and in the background noise from all over the markets, you're hearing raise rates 3 times, 4 times. Guys like Summers, who was never any good when he had any positions, but he's rattling them around. There's other people in the Fed talking about it. But this is the irony that I'm going to show you. If anything, they probably need to lower rates right now. No, that sounds crazy, right? They don't need to taper because there's something bigger going on, and in the yield curve that became very evident when I was going through this on in the live trading room. And so here the structure is this. So now let's go to the charts, because now I want to set this up. I just wanted to get the room filled up, so we got about 150 in. So we'll go ahead and start to get in. So I'm going to show you on the screen here. Sorry, I realized I had the music in the background, so that's a nice way to go there. I've got this on the screen here. It's a 530 spread. I've been talking about it for a number of weeks here. And we started looking at this. All of a sudden, it just keeps collapsing. I've been saying for days and days, this spread needs to be at 0.90. Well, it's right now at 0.55. And I'm going to go full screen so you can see this. And I'm putting a cursor here. Where I'm putting the cursor is February 14th. We'll make it February 21st of 2020. This is where the Fed came in on that 19th on a Sunday and said, we're going to buy everything. We're going to support the markets. What you heard from me then, if you can go back and listen to these videos, if you question what I'm telling you, is that I said, no way the Fed wants zero rates. People are talking about that. I said, they want to see the yield curve steepen, okay? And we're looking at here, this is over here, this big decline on the left-hand side of the screen. That was the taper tantrum, okay? So here's what's going on again. We're seeing another taper tantrum type pattern, but it's even worse than what I'm about to show you. The pandemic low, after they finally got the yield curve to steepen again and get a healthy yield curve, and let me explain just a little bit about why you need that. The steepening, when this yield curve was steepening, think about this. Financials, I was talking about last November, financials, like energy market, the small caps as we came into the beginning of this year, and they just all rocketed, right? There was great money to be made in those sectors at that time. Then all of a sudden we start to see the yield curve flatten. We start to see the Russell try to perform and collapse. And then we start to see all of the things happen. But the setup that I'm going to talk to you about is the Fed's now admitting that there's inflation. Everybody's focused on inflation. Going back, let's just go a year back. All it's been is employment, 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 employment. And they keep driving that narrative. What happened today? In my video last night, I told you, watch out for a miss on the employment numbers. Sure enough, we got it. And I've been talking about for months about how I think the economy is going to stall. So I'm trying to set this up the best I can without being confusing. Is what's happened now, the economy's starting to stall. And what are we hearing from the Fed? Take the punch bowl away. We're going to take the money and we're going to taper. And you're seeing this taper tantrum type pattern here. To the far left of my screen is the 18 taper. Now we're seeing the talk of this taper, right? So what's happening though is the economy was still expanding until we got to the pandemic, right? Then they loaded it up and we got everything expanding, yield curve is steepening, and then we get this collapse. And now we're below the pandemic level. So everything the Fed has done for all practical purposes for the financial system has been taken away. And so I'm going to try to unpack this. I really did a good role earlier, but I'm going to try to recreate what I was talking about. So let's talk. So the Fed is now telling us they're going to taper, and they're talking about liftoff. Everybody on the streets, okay, we're going to have earlier liftoff. We got to raise rates. Got to kill inflation. Now what we're seeing is they missed it. They missed the inflation. Sorry, that's my boss calling in. She doesn't know I'm live. But they missed the inflation, and what we're seeing now is the opposite. They're now focused on employment, on inflation, when they should be focused on employment. And what they did for employment didn't work. And all of the, now we're starting to see the effects of all the mandates, all the crud hitting it. People aren't going to go to work. I talked about something that protesting in the street doesn't do anything, but if 30% of the workforce doesn't show up on Monday, everything starts to shut down really quick. So we're getting to the stage where everything's getting radical. But back to the Fed now is talking about inflation. They admit it. Now they're once again behind the curve, but this gets really disastrous. So I need to tell you one other setup so you understand this. In the banking system, the reason why the yield curve matters, I spent from roughly 1995 through 1999. I ran a consulting service. I had 36 of the largest banks on the planet were my customers, and all I consulted them on is what you're looking at on screen, the yield curve. And the reason why the yield curve is important, what happened is everybody had the steepener trade on. So while this was going up after the Fed came in and the steepening was coming on, everybody had it on. So we got this first big break on the spread, and then it kind of consolidated drift and it fell off the wall. Now everybody is flipping the trade, going from a steepener to a flattener, and there is just a panic in the Treasury market. I've been talking about this for probably a couple of weeks now while this spread has been deteriorating. So now what we have is this. The margins in the financial sectors are going away very quickly. The banking system is becoming incredibly at risk at this very moment. And I can tell you right now, we're not the only ones talking about this. I guarantee you there is a complete all hands on deck Fed meeting going on as we speak. And I'm sure they're trying to figure out what to do. And I'm going to put a couple scenarios out here that I think anything they do will be wrong at this point. Certainly, taking the punch bowl away at the moment probably isn't the right idea, but they're now committed to do it, right? They're committed to raise rates because of inflation, and because if they don't do it, they lose their credibility. So I'm going to flash you back to a couple scenarios that I want to give you context, so when I get to the punchline here, it will all make sense. So I started in the market in 1979. Paul Volcker came into office 2 months after I came in. Interest rates were going straight up. Volcker was raising rates. In fact, the first time that a money fund had lost any value, because money funds always print $1 and they pay an interest rate. Well, they lost value one day back in 19 I guess it was 79, the fall of 79. It was the first time, and it freaked out everybody. Wait a minute, money funds can't lose money. But Jimmy Carter, to his credit, put Volcker in to kill inflation, because he knew if he didn't get inflation down, there wasn't a chance in hell he was going to get reelected. So all starts from a political angle, but it's okay. So Volcker comes in, raises rates in a recession. And not only does he raise rates, coming into, I don't know the exact dates. I'm going to research this some more over the weekend. This is just off memory because I was in the game at the time. And what happened was somewhere around February, March, he was getting more aggressive, and they would do stuff on the opening on Tuesday morning. They would jack rates. Volcker was shock and awe. He was very, very aggressive and hawkish because he was hired by Jimmy Carter to kill inflation. Well, now then, the election had happened. It was too late. Reagan was now president, and interest rates in 1980 the long bond went to 16.75%. The Fed funds and T-bills and all that went to 18-19%, and there was a surcharge if you went to the discount window of 4%. So discount window was somewhere between 16, 17. That's not Fed funds. This is where they go and borrow the money to shore up the accounts and make sure the banks have liquidity. I would love to have a window in on the discount window this very second, okay? Because I think, and I've been talking about this dislocation of capital. That's what's going on here. This has nothing to do with equities, earnings, none of that stuff. Viruses, nothing. Okay. And this is, I'm kind of mixing up a lot of thoughts that are coming back from my earlier rant, but this is what everybody that's been calling for the bubble has been worried about this very moment, I believe. And maybe this will end up to be, like I said on the live room, I want to be wrong on what I'm about to unpack here. So I'm going to continue. I know I'm on this big rant, but I'm only about a third of the way through, unfortunately. But the realities of what's going on is the Fed is no longer running anything. The dog is wagging the tail, and they're now doing everything wrong. What they should do in this kind of scenario is they should be lowering rates. They shouldn't be raising them. They're not going to lower them. The other option that they have would be to do the opposite of what Paul Volcker did in 1980. He raised the reserve requirements on the banks, and it spiked yields up to that 16.75. They had it on for 1, maybe 2 weeks, and they backed off of it, and then they did some other things that were that started to convince the market that interest rates had peaked, and it was all downhill from there. So I went through my entire career, starting in 79, watching rates go to 20% to zero. Okay, so what's happening now is scary, because the Fed, to maintain credibility that they know what they're doing, but we already know. Powell has said multiple times, well, nobody's ever dealt with a situation like this, so no one really knows how to deal with this. He's already told us they don't have a clue what's going on. And this is just further evidence. Now they should have been, while this yield curve was steepening and the economy was expanding, they should have been tapering. That's when they should have been tapering. Just like if you were owning a stock and it's going up, you sell when it's going up, not when it's going down, right? Not when you realize you stayed too long. And that's what's happening now. Now they're so far late, it's not even reasonable to call them late. And so a couple things. If they would have to do the opposite of what Volcker did, which would be lower reserve requirements for banks, which would weaken the financial system, have less backup, and all of the stress testing, I'm doing air quotes, all this stuff is BS, because if they were to do something like that, what that would tell the marketplace, it would tell everybody that exactly what I'm saying right now. They've lost control, and this thing's going to spiral to just completely to wherever it's going to go. And, we look at all these prices. I was saying in the live room that this has just triggered me into a whole level of things that I realize that are going on. And sometimes this is how they work, right? So, and the markets have been actually telling us this is going on. Started last week with the daily reversal on the equity markets, followed by the weekly reversal, followed by today's confirmation of the weekly reversal, and yet a monthly reversal that occurred in the month of November, where we made an all-time new high and closed lower on the month. We closed lower in the month of December. Then we've got a confirmation of that. We're just setting up a top. And, these things, what's going on here with the interest rates, they're about to potentially make every mistake you could make as an amateur trader, as whatever. I mean, these guys, it's scary, folks. I'm just going to mix in because I'm in a crazed moment, if you will, is that we watch who's running our country. Everybody from A through Z. I don't care, Congress, everything. Elon Musk said nobody over 70 should be elected. I agree totally with that, right? I'm almost 70. And the point is that, everything is just in disarray. We know this. And, when I left the house this morning, my wife looked at me and said, "Where's this world going? What's it? I don't know how to how to plan for anything anymore. I don't know how to look at anything. And we all feel that way, right? We've got all this craziness around us. So, but this yield curve situation is absolutely probably and I saw this coming, and I've been talking about it. And I've been warning about this dislocation of capital. So we're here. Let's go to equity market. Actually, I want to show you one more thing before we move on. I'm going to go to historical. Now, I'm going back to 2002 on this spread, okay? And this was the 2018 taper low. But I want to just talk a little. Let me go full screen so we can see this better. So over on the left here, this is the '06 lows. That was the height of the mortgage craziness, right? And then you see '07 and '08 spiking up. The yield curve starts to steepen again, trying to liquefy and get the financial system close. We hit a peak in around 2010 and 11. What was happening in 2010 and 11? The European banking crisis was going on. All of a sudden, we start to get this big flattener coming out. Yield curve goes flat. In fact, it inverted at one stage, meaning that we had a completely inverted yield curve. And everybody was talking about recession and everything then, right? So we get down here, and this is potentially, and I've been kind of alluding to this on my videos every night, is that what we're seeing is this potential inversion. We've already seen an inversion of the 20s and 30s. And what that means is that the long yields are lower than the short yields. We're a long ways away from doing that. But the point is that this collapse is causing this dislocation of capital in the banking system at a point where I was just talking to somebody yesterday, and where money is available for just about everything. Yeah. So let's talk about it, some of the a couple other elements here. So I talked about this, I think, in the last couple of videos. They all blend together. Plus, we do this live trading room now, so everything kind of gets mixed up in my head. I'm spending 4 hours on the internet some days, broadcasting and doing this stuff. So as far as inflation goes, all the inflation metrics are broken. Crude oil went from 84 to 66. You know, those chart patterns have been broken. At worst case, maybe it stabilizes here, but inflation's the wrong place. And I'm just telling you right now, I still think inflation is going to stay high, but that's not going to be the demise of the markets. And, you know, if you don't have enough time to do all of that, go through a lot of commodities and stuff, it would take us hours to do that. Because I do want to flash over to the screen. I just want to see what's going on. So market's bouncing a bit here. So we're back up to 1920. So, yeah. We did print down in the 44 handle, 44.92 low. So we'll go and talk about the markets here. I think I'm done with that rant on that stuff. So we're getting some stability coming in to the close. We got a half hour to go. We'll see what happens here. But please understand that what's going on in the bond market is very serious, and what the Fed does next will determine what kind of credibility to go. So let me look at some of the comments that are going on the timeline. Actually, crude is holding up fairly well, but there's a lot of work. I'd wait till Monday night's video here. let me just bring up, let's go to a daily chart. So we printed down, the low was 92.86 was S3 on the futures today. We printed right off, R1 was 46.03, high 46.06. So an R1 reversal, if you remember last night, I told you R1 probably at least S2. Well, we printed almost S3. So S2 was S2 was 45.17. But once again, PPM's all collapsing. Same thing on, let's go to a weekly chart. And like I said, let's go to equities and talk about that. As we got the reversal pattern last week. Let me go to SPX. It's a much better representation of what's going on. We go back to the high right here, 47.43. Got the reversal pattern, and we click that over to the weekly. I'm going to get rid of the market grid here for a second so we can see this better. This was the reversal last week. We had a projected high there at 47.67. The high was 47.43, so we fell short of the Fibonacci projection. We're now trading through the 10. The PPMs are all rolling over, losing a lot of momentum. And the next stop, if we can close under the 97 level, which it doesn't look like we're probably going to do, but if we close under that next week, then we're looking at least a move down to 43.30. And if I backtrack just for a second back to the 200-day, day 43.05. So there's a fair amount of support, 43.05 to 43.50 raise, somewhere like that. Okay, so let's go back to the daily so we can see that pattern just again. I want to unpack this trade that's happening. So there it is, the weekly. Now we go to the monthly, and that's so we have a weekly reversal that's going to be, unless we rally 70 handles from here right now and we go positive on the session, we're going to get a confirmation of the weekly reversal. The month of November made an all-time new high, closed lower, is a reversal, not a key reversal, but it is a reversal off an ATH, which is pretty significant. If we go back to 2020, we got an outside reversal the month of February. It only lasted for 1 month because the Fed came in and bought the entire world. Spent $4 trillion. That's why we have this. So I can't get out of this Fed fixation I'm on. Is, what is the Fed? There was one other option I didn't talk about in the Fed and what they can do. And the other thing they could do is to put another $4 trillion in the market. How do you think that would be received? I think that would kick up your inflation. It's everything wrong from that standpoint. Everything would be, every action that they're going to take or can take would be wrong. If they put more money in, the perception of the market is going to be that's going to be inflationary, which is bad. If they lowered rates, that's a panic. If they do all the wrong things from the standpoint of tapering and liftoff in this situation, they're going to raise rates right now, that's not going to work. So I don't see how, if the equity markets are going to survive this, unless they flip that yield curve, and I don't know how they're going to do that. The only way, yeah, there's nothing they can do. I think they're stuck. They're in a complete trap. There's no way out. So, man, I was going on for, let me come back on screen for a minute. You folks need to know I went on for a half hour or so on our live trading room, and I had to stop myself because I've been watching these markets a long time. I've been a Fed watcher for 40 years, and I've watched every Fed chairman from Volcker, Greenspan, Helicopter Ben, Grandma Yellen, and now we got this Powell character. So we're getting a pretty good short covering rally right now as we're sitting here. Pretty impressive. We printed down almost to the figure, and now we're getting a pretty good rally here. So I hope a lot of this made sense. There's going to be more when I have some time to do some research. But when I saw that we're taking out that yield curve low, may get a little bounce here. They've got to do something. The only thing they can try to do is they're going to have to buy the short end of the market. So now this is going to be an interesting flip-flop for me. Yeah, there's one other thing. Do they dare go to negative rates here? Do they have to go to the point of pushing the short end of the yield curve into negative territory? Hadn't thought about that. Like I said, I'm going to have a couple of days to think and research, and I'd tune in on Sunday night, see what I've come up with. Yeah, I don't know if Monday will be a bounce or not. I really don't. I think I see somebody. I love it. Like I told you folks in last night's video, the trolls are back. I love you guys. I had some guy telling me market's going to be up huge today. I thought, man, thank you. That just confirms. I always know when I'm right. I really want to get as many trolls as I can on the channel. I love them. I don't like the bots, but I do like the trolls. I love all the guys telling me I'm wrong. So those are just confirmation. So think about it. Yeah, I see somebody, no one saw this coming. Our database is already liquidated. I've been talking about, we help to manage a lot of money in the markets, folks. We're not just, I'm not just a guy drawing trend lines here. We have real software, institutional software, individuals also using the software. And I think, how can I say it? Have a perspective that few have, but our database, we're at 24% long in the short term. So basically 80% every stock in our database is not in, hasn't been in. It's been well below 40% for a while. Our intermediate database is at 37%. And just as a perspective there, that normally doesn't get much below around 24. Now, we did see in the 2020 situation, we saw that happen. Well, all I can tell you that the potential, boy, I want to be careful what I say because I feel the emotions of the moment and what I discovered today. But I think what I want to say is a situation like what I'm talking about with the Fed and this dislocation of capital is way bigger than any virus. And there's no way to stop it. I've been preaching for years, folks. You folks have known me for better part of 2 years. And I've been preaching for years that we're one bad auction away from disaster in the bond market. And we have auctions every week now. billions and billions of dollars of auctions every week. You got a $24 trillion deficit, right? So, yeah. So that's the other thing. I'm gonna bring something up. I'll bring it up on the other screen, and I'll slide it over here. One second here. I'll get it up here. Bear with me. So, bring up the debt clock. This is another conversation I've been having for a year. What number is it that we fail at? So the things that are going on right now are we have to raise the debt. They just extended running the government, and 12 days they have to make a decision about the debt ceiling, which they'll raise again. There's no way out of this, right? Debt to GDP ratio 125%. So I've been saying, what number is it that we hit where everybody realizes this is unsustainable? Maybe we're actually getting to every bubble scenario. Maybe Peter Schiff will actually be right. Imagine that. Sorry. I had one face-to-face encounter that didn't go well. Peter and I are never going to be friends, but that's okay. I really don't want to be his friend. But the point is where is that number? Is it here? $29 trillion? It just turned the clock recently. So anyway, just thought I'd bring that up for some perspective. And but every time I see this, it makes me think. Everybody wonders who the worst president of all times was. From a financial standpoint, it was Lincoln. Okay, I won't go into a rant on that, but Lincoln was the worst president ever when it came to financial. He got us out of the. He's the first one that made it possible to do debt, and he did it, and he started the greenback, was the first fiat currency. That all began from there. And not to mention the debt. So the Jeffersonian days did not allow for the government to borrow debt, to have any debt at all. As soon as Lincoln did that, everything changed. They did the greenback. They started first, currency, and then you saw this other thing. I forget where it comes up at, but somewhere it comes up that Kennedy was the next one to make some changes, and of course, they went off the gold standard and in '74. So all of these events have got us to this screen here. So it's pretty ugly. Let's go back and see how these last 15 minutes are trading. Back to 12, so plenty of sellers still around. We'll hang out with this thing, I think, for a little bit. And let me bring up the chat line to see if you folks, I think I kind of blew my adrenaline gland today. A very intense morning trading, and then this. Yeah, I think I closed the browser. Oh, it's over here on the other screen. Okay, that makes sense. Yeah, Elzar, just send an email to us so we can follow up. This is a bad venue for that. Just send us an email. We can figure out what we can do for you. Okay. Kendall report, info at Kendall report. I'm just looking to see what you folks are saying. Gold to 2,500. Actually, didn't hear it first. You heard it from me first, Red Rocker. I've been talking about 2,200 anyway, gold. Yeah, I agree, Rob. Just taking a look at some of the things you guys are saying here. Give me a symbol LL for corporate yield, like was it LQD? Yeah, it's up right now. So I don't think anyone's really talking. Yeah, look at this rallying today. Yields are up. So you're going to see this situation I'm talking about is not mainstream here. Yeah, I think I'm going to have to bring up to do some of these stuff. Yeah, I haven't looked at the ratio charts on the ETFs, the IWM versus QQQ. Yeah, junk, J and K. So, okay, that's at least down a little bit. And look at this decline in prices here on the junk chart here. This is daily. Let's look at weekly. ES back at the 45 handle, 4504. We got like 12 minutes ago. Look at a couple more things here that you folks are calling for. Yeah, sorry to hear that, Brody. Yeah, Dune 990. Last week was the game changer for the markets. But when we made that all-time new high in the reversal, everything changed. Yeah, I know, Fabian. That is also the case. That's what everybody's counting on, that we can become Japan, right? Yeah, I covered in the live room Tesla. We're 4505 on the futures. Let me put Tesla up for a second. If I get it right. We're right on the 10-period moving average. I'm going to put the market grid back up because this is important to understand as far as Tesla goes. We are in identical pattern that we were in at the beginning of the year. Now we got Elon dumping billions. So if you look at this pattern, I'm going to put a cursor on here. Tesla got an RTX sell signal on the 8th of January. Went sideways, we slid down. We're right on support, so it should hold here. We're at 2.37 ppm on a weekly, so this should be the bottom end of the range, but we're probably going to set up something like this where we get a big pattern, probably drifts lower, and then one of these patterns, we could even, maybe this is even a wave 5. I'll have to dig more into that. But we're definitely at support levels. A couple things happening here. The low 1000, S1 1041, and the 990 is the 10 moving average. Give me a gold miner index, and I'll take a look at that. Yeah, so the futures are starting to bounce. Let's watch this last 9 minutes here real quick. A little short covering coming back in. And as I've been saying, the algos are running this game here today. And earlier in the day, I got in big trouble hanging around with those guys. I usually tell you, don't trade on days when these guys are running the book. And that's what's happening right now. There were several times during the day that we saw liquidity disappear again. So here we are printing back at 17. We were 05 just a second ago. What was the low on that print? 0475. Is that right? Hang on. No, 0250, 0125. So here we are, 20 handle run again off of that 45 handle. So this is going to be worth watching. Okay, GDX, okay. Yeah, I was looking at GDX the other day. I will bring that up. Thanks, folks. Yeah, so pretty decent short covering rally here. So all these algos have been selling all day. Yeah, I just see a lot of folks getting caught in these stocks. Man, you guys are hanging around me, and you should have that. I know Jalen. I think you just joined the live room. I'm not sure. I think I saw your name there. Yeah, I want to see how this recovers. I'll go back and answer some of your questions here in a few minutes. Let's focus on the next 6 minutes of this close. See if there's any selling coming back in here or not. But decent short cover. But 4 hours ago, if you had said we're going to trade 45.24, you wouldn't be very happy. You wouldn't think that was very good. Right now, it feels good because literally 9 minutes ago it was 45.01. So, hey, Jalen, would you do me a favor and send an email to info at kindlereport.com and just introduce yourself. And so I've got some ideas for you. Yeah, so printing up, look at this, 28.29. Big rally. 30 prints. I've showed you folks how to find out. Yeah, you're probably right, Pedro. Yeah, deflationary crash will not be a good path to normal. It's about as good as a reverse 10-for-1 split on a stock. So 31.75 print. So we're still short covering here. Look at this. This is pretty impressive. $33 high now. And that was a serious rip your face off rally. It's still not done. That's pretty much true, John. You turn your head. Look at this, 35 prints high. Looks like they got more for it. Maybe we're finally getting to the point the webs are starting to indicate maybe a little top here. This thing could come off just as fast as it just went up. There's virtually no liquidity. We're talking less than 100 on the side. Yeah, it's pretty crazy here. We're back at 35. Almost new highs on this run. Here we go. 35.75 high, 36. So we were down 1.5%, now down 0.86. Still buying them. 3 minutes, 2.5 to go, 38 prints. 38.75. $39 high on this one. We're down into the final minute and a half. Still a good solid bid in there. $39.50, another new high on this run. Yeah, well, this is some algo pain here. They're covering up. They've been selling all day, and they were hoping for sellers on the close, and there isn't anybody. So they're caught. The algos are who's caught here, most likely. They're just trying to get out of this thing. And that's why there's such a big bid, because they were expecting heavy selling, and they didn't get it. We're still printing 950 high on this run. Pretty impressive. About half of the sell-off, it just disappeared here in the last 12 minutes or so. And we were printing 3501 right here at 47, 13 minutes ago. And they're still right at the highs on this run here. There we go. A little bit of selling coming in. So that was the final bell. Now they get to selling. A little bit anyway. 39.50 run. That was a 39 handle run in 12 minutes. That is correct, Pedro. Yeah, so like I said, we got a confirmation of the weekly close. That doesn't mean we can't rally a little bit on Monday a little bit. I'll set up all the parameters on Sunday night. And we'll see you in the live room on Monday. Yeah, let's flop over a little bit. Yeah, so this is still a bullish flag on this 1 minute graph here. Get a little dragon head here. I don't know if they can run them up more in the next 15 minutes, but that was impressive. Yeah, we'll do GDX. I'll do a couple things before we cut off here. Yeah, the good old bell. Back in the floor days, they had multiple bells. They had a 5 minute and a 1 minute. So you knew you were coming in. That was it. Yeah, it's kind of interesting. I'm trying to click to another tab on TradeStation right now, and it's like frozen. There's so much data coming in, it can't even handle it. Yeah, I can't get anything to work right now, folks. So I'm just trying to get off of this page and it won't come off. Really strange, just frozen. Kramer's an idiot. Everybody knows that. Man, this platform is frozen up. Let me see if I can get... All right, I got Trading View up. See if I can get to another chart. This is market grid and the PPMs in Trading View. What do I got up here? Yeah, this is the 1 minute futures. So you can see how this thing just rocketed right in there. Um, yeah, Neo's not looking pretty good, is it? I'm just still, there we go. Now it's working, of course, because I brought up the other platform. Let's put Neo in over here. We'll do a couple. We'll do GDX. So Neo, good news for Neo. It's got a STX buy signal. So we should see maybe some sideways, maybe early next week, 30, 33 and a half, 35, 30, something like that. Maybe a little rebound here. Let's bring up the E-minis real quick, and then I'll go to GDX. I just want to see how this is looking. So, while that little rally felt good, we're looking at it closed just below S2 weekly, printed down to S3, low 92, S3 95. I'm sorry, STX was 44.95. So we printed STX weekly. This is not a good looking chart. That rally may have felt good, but you know, if all we were down 40 right now, we had a high of 46.06 and we were closing at 45.35 and we didn't watch that rally. This is why I detach from these markets, because that rally makes you feel like something good happened. It didn't. It was impressive, but it didn't. So let me try to get this chat line back up so I can see some things you guys are talking about, okay? So bear with me a sec. Yeah, almost 1% in 15 minutes. Like I said, that was all the algos stuck, man. They were looking for massive liquidation, and they didn't get it. I love when those boys get stuck, boys and girls. Is that right, Vadmer? Is that Neil worried about delisting? Okay, what else were you guys asking me? GDX, let's do that. Like I said, I've been in a mad scientist mode for a couple hours, so actually since early this morning. So, yeah, GDX, this is weekly. There's still, these miners, they just always act weird. So a couple things, optimistic things here, is we're getting that bubble formation where a low will start. At least we're able to get an uptick here. How did gold end up? Up 21, that's pretty good. We'll take a look at gold real quick along with this. But PPMs are still really negative. So there's plenty of work to be done. The best you can expect is maybe some sort of consolidation down here. It's hard to see this number. Let me do something real quick. Change this to yellow. So there was a target price, low target of 30.24. The low was 30.09. So it did hit a fib target. So maybe we'll get a bounce. But there's a lot of work to be done on this one. Let's go to gold. As I mentioned in last night's video, gold is sitting, here's 1791.70, the high 88. That's going to be serious resistance right here. And there's going to be challenges probably right off the bat on Sunday's reopen. Yeah, Docu, wow. Well, there was a cycle that came in today, so we got a STX buy signal, crazy momentum on the downside, minus 0.58. I mean, this thing's in absolutely no man's land. That's a lot like even this one, Upstart. It's another dog. It's just slicing through everything. I don't even know if there's anything. There's all of these meme stocks. We built a portfolio in the. What is the new symbol for Facebook? I think we need to change that. This is another fun one, a firm. Downward fib targets 82. The 200-day moving average is coming into play here. Maybe there's something there. That's kind of wishful thinking. But momentum, that's a scary one. I hope you don't own that. Listen, I know this is going to sound like a sales pitch. When I hear all this stuff, you guys had Wave Tech. Most of these trades you wouldn't be in right now if you're in these things. I mean, if you spent more than $100 losing on that trade, then you could have saved yourself probably a lot of money. Yeah. Yeah, I'm really trying to put out some really good products, some good good stuff out there, folks. I appreciate all the respect that I get on the channel and all that. Somebody paid me a really nice respect, said it was like a college level course. I thought, well, that's good. I was hoping he would have said graduate school, but I'll take the college level. At least it's not the typical stuff that goes on the internet. So listen, I've been running for 3 hours now on this thing between the YouTube and what we were doing on an impromptu on the live trading room. But seriously, I mean, folks, you should consider trying for a month. I mean, I think when these markets turn around, you're going to want to have, something that is not emotional, that you have at your fingertips. You basically, this was a joke back in the day. We were going to call the software Virtual Bob, okay? I did yesterday, those of you in the training room got exposed for the first time to some trade setups that I did. And I'm going to put some documentation to back up what I did, and that's the beginning. So the whole live trading room, it's not really day trading kind of thing. We're actually building a portfolio for 2022. We're working on a lot of stuff. We're doing education. Everything's kind of intermeshed in here, and I do 9 hours a week on that channel, and it really gives us opportunity to do some things I normally don't do on, and I can't do on YouTube. It just wouldn't make sense. It'd be great if I would, I think, for some people, but what we're doing is really trying to build a strong community. So if you haven't joined that, then you should. And you can find out about it, kendallreport.com/trade. That's one place. That's probably a good place to go there. And, see what that's about. If you want to do Wave Tech, you can just do Kendall Report /WaveTech. That's WAVETECH. And you can get started. I mean, I think there's some really good going to come out of this stuff. Not just my rant today. We'll see how everything plays out. I hope that rant was just a trigger. And like I said, I actually want to be wrong on what I think's coming in, because if I'm not, then there's potentially a lot of pain if you're just trying to hold on to these things. I've been exposed to some folks that are trying to act like they're Warren Buffett, and they're not. And when Warren Buffett was making his money, the markets were easy. They're not easy anymore. Back in the, I've told stories in the live room about one of my mentors, and between 1974 and 1981, every $10,000 invested turned into $1 million. And so that was substantial. That was a 10-bagger in 8 years, 7 years. And he was very famous around the firm. It was a major Wall Street firm. I happened to be lucky enough to be in the office next door to him. I learned a lot of stuff from him. But, those were times where making money was pretty easy. And even through the 80s, it was easy. And after maybe 1980 .com, things have gotten increasingly more difficult. And now we're probably, I'm trying to think of a time, just in closing here today, I'm trying to think of a time that maybe you could say, you could compare this to. This might be similar to the .com era, maybe even bigger and worse in a lot of ways. We've got a lot of new entries because of fractional trading and no tickets, and it's very cheap. Anybody can get involved in the markets now, and a lot of people have. We did 7.5 billion shares today, and I keep threatening, I'll have to put this out there, I guess. I have an old, not really a podcast, but a recorded conversation with me. I've got a video I put up there. And it's just me talking about the fall of 2019, what I thought was going to happen next with fractional trading and no tickets, basically the Robinhood model. And Charles Schwab had just adopted that. They got away with ticket fees, and they announced they were going to do fractional shares, which I believe they do now. And so all of this stuff has made investing for everyone, not for someone, but there's an awful lot of amateur folks out there that are, there's a lot in them, and please don't take offense, because I'm not trying to offend, it's just an honest moment, is there's a lot of folks that, younger investors that got lucky in 2020, and now all of a sudden they're geniuses. And now some of these stocks that are rolling over are starting to teach them that it's a little bit more difficult. I remember when the pandemic started, the barrage of stuff that was coming at me. I talked to some gentleman, nice guy, and it was a sports bettor. Remember when all the sports bettors were coming into the stock market, and they were telling us how easy this is easy. God, this is nothing compared to betting on games. And I thought, well, you might want to hang around for a little bit longer, and you'll find a little bit more challenges, I think, as you go forward. So anyway, I just kind of worry that there's a big lesson being learned right now on this decline, especially in the meme stocks, especially in all of those things that go on. So so anyway, I think I'm pretty much, like I said, pretty much blown out of here. Yeah, Kathy's Casino. Gotta love that girl. Maybe it came back a little bit. I saw it at $92, $93.50, down another 6. Well, good news is there's a cycle low coming in on Monday, so that could help. Yeah, there is a, listen, I'll make a quick comment, but I spent years I've been around a lot of penny stock trading in my life, and I've seen the pump and dump firsthand. I would tell you that I have a very close friend that was in the early 80s, probably one of the early the pump and dumpers, okay? His very first trade that he did, he made a quarter of $1 billion, made 250 million bucks. And he got a nickname in Vancouver. Is a very close friend of mine, and still is. So, you know, you see this stuff, you know, and hey, if you do it right, it's like with Bitcoin, it's like with all these things. If you do it right, like I had a mini Twitter war with a guy, and it's like I've never seen an investor buy a stock at $80, watch it go to 400 and back to 150. I mean, you shouldn't even be allowed to talk to anybody. And, you know, at some stage when it printed 400, you had to realize this thing was way overdone. It was all being hyped. Yeah, I noticed a lot of people dislike. Well, Kathy lost 60% of your money, so it's kind of hard not to like her, uh, uh, not to hate her. I don't really hate her. I just think she's amateur, and she got lucky in 2020 because if you look at the performance of all of her funds prior to 2020, nothing ever there. Now all the air's coming out of these dog stocks that she owns. You know, I think she sold a bunch of Tesla before the next run and bought DraftKings of all things. Then she buys Zoom and then Zillow. I mean, come on. I mean, wow. So I'm not sure she's as smart as you think she is, Jalen. I really don't. You look at her at a book of her background, and she, you know, she had a great idea with the whole innovation and all this stuff, but yeah, you can't take these stocks that have been around for a couple of years and run an entire fund. There's something to be said about running other people's money, which I've been involved with for 40 years. So I take what I do here on this channel. Yeah, I don't know if she called it oil or not. She said it would never go over 76. It did. And oil's not over yet, so we'll see. But her claim to fame was backing Tesla, absolutely. And, you know, and listen, I'm not trying to badmouth her. I've looked at her portfolio construction and what she does, and she's a millennial buy the dipper. That's all she does. If she was looking at any of these companies realistically, she wouldn't own hardly any of them. You know, she's had the same experience. I said she's watched these overvalued companies come back to maybe reasonably valued. Many of them not. So that, you know, when you look at, you know, even like guys like, I used to criticize, what's his name from Peter Lynch. And Peter Lynch wasn't necessarily as good as people thought he was. He happened to come around in the early 80s and he bought every stock known to man, and the stock market went into a major bull market. And then he tried to time leaving the Fidelity job to the top of the market, and he was way early, like 15 years early. But the point is, you know, a lot of times it's the construction of the portfolios. There's a lot of dynamics here that's going on, and I'm sure Zillow was upside down on these houses, right? So, but that's Heart Goes Technical and Fundamentals. That's what we've been preaching for 20, 25 years. That's what we do. You know, in our service, we have screens. You guys are keeping me engaged, so that's okay. But we have, like if I go over here, hang on, I gotta log in. So what we're offering you folks and being involved with us on the software side is a complete process, not just some software, not some algorithms. It's not like that at all. Hang on. Why am I not getting that? Oh, here we go. Bear with me, I'm just bringing up something. So on our website, portfolioexpert.com, we have this, the stock screens, and we'll have brand new stock screens on Monday, and those in the trading room. This sheet that's coming up, this will be updated Monday. This was the 1031 sheets, so these will be updated here. And what we provide is like a whole service, stock selections. These are professional grade, institutional grade screens for finding stocks fundamentally. So if you combine the fundamentals and all that, that's what you get, and that is what you should have. We've got these dashboards, WaveTech, Market Grid is up here. There's a bunch of stuff here that's usable, but the stock screens are invaluable. Okay. Oh, I know what I wanted to show you is over here under support. If you go to the stock screens, you can go to this portfolioexpertnoe.com, and you can go to support and bring up this, and this is the screens. So you got all these different screens. We show you style box, all kinds of things. We give you exactly what these do, and then we actually show you how to use these things to build constituents. And what we're doing in the live trading room is actually showing, going through all these screens, trying to set up, like I said, we're trying to come up with some themes right now on 2022, and coming up with a strategy. I'm pretty good at figuring out kind of themes and places to be involved, but that's, yeah, so I'll expose some of the YouTube stuff to that. But yeah, so these things are there. You can actually go to screening ideas. It kind of shows you all that. And then there's some definitions, and we talk about duration. So this is the uniqueness of the product that I built. And I'm probably going to be doing a video, because all of this came from a research project that we did and for trading in 1984, and it just evolved over all these years. So it's been a very long path getting to where we've gotten to from that standpoint. So there's some really good stuff here, folks. It's sincere, and, and honest and everything. So that's why I told, I hope Jalen, if he's still around, that he reaches out to us so we can help him out with stuff. So anyway, I really appreciate everybody hanging out, and we still got like almost 360 people hanging out. So thanks again. I think as we come into 2022 and we look at what's possible, I love the fact that our database is getting reset. It's going to be interesting to see when we run our models on the intermediate models tonight, how they work out and what's going on there. And so, yeah, there's a lot of cool stuff that we're trying to help the community with on retail and institutional. We've been actually bringing in a lot of institutional folks, again, have been showing up with this volatility, which is pretty typical from the industry viewpoint. So yeah, just really busy. Like I said, I'm spending a lot of time on the internet talking to you folks and teaching. So, the educational stuff we're going to do, I think, will also be really, really positive. So appreciate everything. So I'll say have a great weekend. I've got at least one bottle of wine in my future, and that will be later tonight. So thanks everybody for hanging out. We really Appreciate it. Thank you, Natasha. It's always nice to be loved, right? But yeah, you know, you folks need to know I love this stuff. Okay, this is my life, and I see, like I said, I was criticizing folks that are claiming to be analysts. There are thousands and thousands of them on the internet that have a day job. This is my day job. So I appreciate you folks all being part of it. So have a really great weekend. I really appreciate everybody hanging out and doing stuff. It's like I said, there's so many good ideas when you guys come out with comments. That's why I keep soliciting in the live room. Be vocal. Because some of those things, there was something that triggered me into this whole yield curve thing today. So more on that on Sunday. So tune in. Have a great weekend, everyone. You're funny, Jake. Hey, I'm going to call you. I saw your call earlier. It was just a crazy day. Yeah, Randy, give us another shot. I'll even work a deal if you reach out to us. Have a great weekend, everyone.